What do you think then of, the U.S. has had some not failed auctions, but poor bid to cover ratios on 7s and 5s recently. And a survey of investors said they'd rather own 20s than 50s or 100s. What do you think about duration right here? And why can't the U.S. Get a good bid on the bonds even as good as the on the run bonds are getting?
Well, I think partly the fact of where cash rates are. So one of the things that, again, I've talked to you about over the last year is why we've had a relative preference actually for cash relative to particularly government bonds and G-10 government bonds. We've continued to retain credit because we don't actually see yield spreads widening at this point in time, because actually, particularly in investment grade, actually underlying corporate earnings and cash generation are accommodative to that trade. To me, at this point, really the question you're asking yourself is, do I want to invest in government bonds? It's a real vote of no confidence in the outlook for the economy. Now, I find that odd a year after we saw one of the biggest tax cuts in US corporate history. And part of the reason why the US consumers are strong this year is that the second round effect of those tax cuts came through this year, which is why the outlook for the US consumer has actually been stronger than most participants indicate. And then coming back to the point that Anna raised right a minute ago about that chart in terms of you don't get re-elected actually if you have a recession, that's ultimately Trump's key focus. If you look back to really the turn of the last century, if you've had a recessionary period in the prior year up to election, you don't get re-elected. And it's as simple as that.